Most people think the AI boom is being driven by billions of everyday users, but the truth is far stranger. Right now, almost the entire AI economy is being propped up by just a handful of companies. The same seven megacorporations buying from each other, investing in each other, and inflating the market together. If any one of them stumbles, the entire system shakes. These companies, Apple, Microsoft, Alphabet, Amazon, Meta, Tesla, and Nvidia, now make up more than a third of the entire US stock market. And nearly all the growth over the last year came from them alone. If AI cracks, the whole market catches a cold. On the surface, everything looks unstoppable. Nvidia briefly touched a $5 trillion valuation. Microsoft and Amazon are pouring more money into AI infrastructure than entire countries spend on their militaries. Analysts call AI the second coming of electricity, the internet, and the printing press. But here's the uncomfortable question. How much of this AI explosion is real, and how much is just the same giants passing money around in a loop? Start with Nvidia, the casino's favorite chip dealer. Its data center division is printing money. Demand for AI chips has skyrocketed to levels no one thought possible. But look closer at who's actually buying those chips. It's not millions of startups, it's not small businesses, and it's definitely not ordinary consumers buying AI subscriptions. It's the hyperscalers, Microsoft, Amazon, Google, Meta, the four companies responsible for the overwhelming majority of AI chip purchases. Together, they're spending hundreds of billions of dollars every year building AI data centers, GPU clusters, cloud platforms, and AI factories. That spending goes directly into Nvidia's revenue. Nvidia reports those numbers, the stock goes vertical, and investors pour in even more money. And then what happens? Those same giants take the AI hardware they just bought and sell AI compute to other corporations, trying not to fall behind. That revenue pushes their own stock prices up, which pulls the entire index up, which attracts more investor money. And because those seven companies dominate every major stock index, passive funds are forced to buy them automatically. Money flows into the Magnificent Seven. The seven pour money into AI infrastructure. Nvidia books record sales. Cloud giants book AI demand. Their stocks rise, indexes rise, more money flows in. It's a feedback loop. Real but extremely concentrated. None of the revenue is fake. These companies are massively profitable. But right now the AI boom is not broad, organic consumer demand. It's a small group of trillion-dollar corporations spending staggering amounts with each other, creating the appearance of unstoppable growth. That's the risk. Because for all this spending to make financial sense, big tech will need trillions, literally trillions in future AI revenue, not hype, not potential. Real sustainable revenue from real customers. If that doesn't happen, if companies decide AI isn't transforming their bottom line, or governments restrict AI power usage, or new models plateau, then the loop runs and reverse spending is cut. GPU orders shrink. Growth expectations fall. And when the same seven companies make up nearly 40% of the entire market, everything falls with them. So, is AI a revolution? Absolutely. It's real. It's powerful. And it's already reshaping the world. But is there also a bubble? When seven companies are almost single-handedly holding up the global market. When most AI demand comes from those same companies spending money on each other. When valuations depend on growth that hasn't arrived yet. You don't need fraud for things to collapse. You just need the story to slow down. The AI casino is open. Just make sure you know who's dealing the cards and who's sitting at every seat at the table. Thanks for watching. If you want more breakdowns like this, make sure you're subscribed. I'll see you in the next one.